The world's richest man, Elon Musk, wants to buy Twitter, all of it. The Tesla and SpaceX boss already owns 9% of the company. That's more than anyone else. Now he wants to be Twitter's sole stockholder, and he's offering existing investors $54.20 for each of their shares. That's a 38% premium from the firm's share price on April the 1st, the day before Musk made his stake public. His current offer would cost him $41 billion, but to him it's worth it. That's because he said in the past that he's unhappy with how Twitter is run, arguing that it stifles free speech by filtering content. But earlier this week, he rejected a seat on the board, seemingly giving up the chance to exert his influence there. And now we know why. It's because he had bigger plans. In a letter to Twitter chairperson Bret Taylor, Musk said, and I quote, "I now realize the company will neither thrive nor serve this societal imperative in its current form. Twitter needs to be transformed as a private company." He added, "My offer is my best and final offer, and if it is not accepted, I would need to reconsider my position as a shareholder." Now, for more, let's go to Craig Erlam. He's a senior market analyst at OANDA in London. Welcome to the program, Craig. Glad to have you here. Now, a blockbuster announcement by Elon Musk. Do you expect shareholders to jump on this?
I'm not convinced. I mean, the fact that it is this one-time offer may tempt some. It seems that a negotiation is not on the table. But then you look at the Twitter stock and you look at where it's trading now compared to where it was, say, last year. And even though this offer looks like a massive premium on the current share price and the previous share price when his initial stake was announced and when he was actually initially put the offer in for that stake, it looks like a massive premium. But compared to last year, it's not. And yes, the environment's very much changed and tech stocks have had a very tough time over the last 3 months in particular. But I think there's going to be many shareholders looking there saying, well, if I wasn't a seller at $70, I'm certainly not a seller there. So I don't think it's necessarily straightforward.
Now, if this offer does succeed and he takes over Twitter, he promises to make some big changes. He says in his letter to the Twitter chairperson that there's a lot of potential in the company that he argues may have been squandered over the past years, especially if you compare the company to Facebook, a much bigger internet platform now. What is the path to Twitter potentially catching up to the likes of Facebook and Alphabet?
I think it needs to almost refine its identity, and I think he understands that. He looks at a lot of other platforms that have arrived since Twitter was the new exciting thing on the street, and he's seen that they've overtaken it quite quickly, and that maybe the platform's looking a little stale, maybe it's lost some of its appeal, and I think he's got many ideas on how it can bring that back, but it just clearly in his initial discussions doesn't sit well with the rest of the company, and he's decided that if he wants to make Twitter big and he wants to make Twitter relevant again and he wants to stop it going down the kind of slippery slope that many would argue it is on, that he needs to have full control. Otherwise it's going to be a slow and arduous process that's not going to deliver what he wants to achieve, and I think that's going to be that's the issue here, and that's why he's quickly realized that being the largest shareholder doesn't bring the kind of influence he was hoping for.
All right, Craig Erlam from OANDA in London, who is on Twitter at Craig_Forex. Thank you for joining us.
Thank you.